The CAD-CHF short that I lost on Monday, January 20th, 2025, is very similar to the CAD-CHF trade I was thinking about taking on Friday, January 17th, 2025. I did not take the trade on Friday because of the segmented diversion pointing to the trend reversal and the high probability of the bounce on the one-day chart. On Monday, I saw that the 1-hour support was broken. After the break, there was a small reversal back to the support, a subsequent small bounce down from it, and it looked like the price was going down. What I missed was a relatively strong diversion against my contemplated short. The one-day chart, just as it was seen on Friday, showed the high probability of a bounce against this trade. Driven by the FOMO, I did not wait for the bounce to EMA 20 and entered the trade. It started going against me, and I was ready to exit at the 2% loss when all of a sudden the price jumped up like crazy and started going fast up and down. This jump happened at 8:30 a.m., but there was no news there. I stayed in this high volatility and exited at the point of a 3% loss. This was the day of the Trump inauguration, and apparently, this motherfucker said that he was not going to impose tariffs immediately. On that, the market went nuts, and I have lost more than I lost due to my bad entry. This case study shows my susceptibility to FOMO, and in this case, not waiting for the price to touch the historical level of EMA 20 bounce. It also shows my mistake in not respecting the high probability bounce against me on the one-day chart, and also my failure to respect the very obvious one, our diversion going against my trade idea. The last thing is that the trading view was showing sell on a one-day chart and also sell on a 1-hour chart. This shows that the trading view guidance does not hold against diversions and bouncing levels.
Now I'm showing Friday charts. This is 1-hour chart. It shows my contemplated short. It also shows a very strong segmented diversion going against this trade idea. And this was probably the strongest deterrent for me to not take this trade. This is a one-day chart showing a very high probability of a bounce going against my short trade idea, also a powerful deterrent for me to not take this trade. The trading view guidance for one day was showing buy on moving averages and oscillators, and the summary was showing buy. Now, this was obviously totally against my trade idea. And this is trading view showing 1 hour guidance. It's also buy everywhere. Moving averages buy, oscillators buy, and the summary buy. And this is why I did not take this trade. Now I'm showing my entry on Monday, January the 20th, 2025. It looks pretty good, doesn't it? I entered here on 1 hour with 5,000 units, and I thought I was going to fly. I wasn't waiting for the bounce to the historical bouncing level of EMA 20, and that was one of my grave mistakes. This kind of mistake results from my quite frequent FOMO. I must admit I've been committing this sin quite frequently. And this is another 1-hour chart showing that the trade has gone against me, and it's actually showing a little bit of bouncing down of EMA 20, and I should have waited for the price to reach that level because it has been a historical bouncing level. I haven't done it. And again, this is my fucking FOMO, sinful way of entering these trades. This chart also shows that I added another 5,000 unit, thinking this trade was going to fly. It also shows a very relatively strong diversion here, which I missed. I don't remember realizing that there was a very prohibitive diversion here before I entered this trade. This chart also shows 10,000 unit buy stop, which is what I'm using as a stop when price goes under my break-even level on the Oanda chart. This is what I call the hedging stop. And on the next chart, you can see what happened, driven by the motherfucker Trump, when he decided to say, oh, I'm not going to impose the tariffs immediately, and the market went nuts. As the price action was going against me, I was ready to exit if 1 hour bar would close above this level, this black line, horizontal line. I was at this level, I was at about 2% loss, and I was okay with it. Not very happy about it, but okay with it. I also had stops a little bit higher on this chart, regular stops. But when the price jumped up like crazy, these stops were hit. And also my hedging stop was hit. It was really crazy. The price was jumping up and down, high volatility, and I finally managed to exit at 3% loss. I know from looking at this chart, if I kept it longer, this whole thing would actually turn out to be a winning trade. But seeing the horrendous, terrible volatility, I was happy to exit at 3% loss rather than risking who knows how big drawdown on this trade. And here is a chart, one-day chart, showing that even this chart looks better than the Friday chart, Friday one-day chart. If you look at the entry level, it shows that there is still pretty high probability of bouncing up, which means going against my trade, showing on this one-day chart. Now let's go to the trading view guidance. The one-day trading view guidance was very congruous with my trade idea. You see moving averages, sell, oscillators, sell, summary, sell on one day. Let's go to 1 hour. The 1 hour was even stronger. Moving averages, strong sell, oscillators, sell, summary, sell. And what I have to say here is that even before this crazy jump in the price resulting from what Trump did, meaning at the point of my entry, even though TradingView guidance was pretty much showing sell, sell on one day, on 1 hour, the trade went against me right from the start, which tells me that the TradingView guidance doesn't really hold against diversions, against high probability bouncing levels. It is helpful, but I can't use it when I see diversions or high probability of bounce. And the last thing which I want to show here is what Mr. Tom Hugard realized after he also saw his ducks exploding. And he says here that the next 4 years may be plagued by some crazy market moves due to the idiot in charge.